F3 candles, which is going to be these candles here. They show up on your screen. Going to be blue candles. The blue candles represent strong bullish momentum, strong bullish candle, and the intention is that the trade will continue to the upside when one of these candles fires. That was the intention. It's a combination of different indicators that we use to put this together, and that's what we're expecting from these candles when they appear. So blue candle is going to represent bullish price action, and your yellow candles are going to represent bearish price action. That's the intention of the F3 candles. So pretty straightforward. Blue candle, our expectation is momentum to the upside. Yellow candle, our expectation is momentum to the downside. Doesn't always play out that way, but that is the intention. F3 zones were created as a representation of different characteristics of price action that you should expect when price is in these locations on the chart. So, for example, right here you see price open up first candle of the day and closes above this green line. This green line here is going to be your bull break area. So this entire zone here, when price is trading above it, our expectation is price will continue up to the upside, and you're going to find resistance at any level above this area. If price is trading above bull break, everything above it's going to be a resistance, right? That's what you want to be paying attention to. So each zone represents a characteristic that we expect price to act in that way. So you come up from bull break, the first target you have, first resistance you expect to encounter is mid target, right? Look to see if there's a reaction there. The zone above that is going to be a target zone. Reaction there, you expect to see reactions at these levels. So over time, these were the areas on the charts that we'd see price react in a certain way, and that's how the tools came about. F3 traders use the trend cloud to help us identify what the trend is. So it's as basic as this. When you get the rocket right here, blue trend cloud, we expect bullish price action. When you get the yellow bear, yellow trend lines, yellow background, we expect bearish price action. Alright, that's pretty much how it goes. I typically don't use the trend cloud on the bigger time frames. Some people like to use it. I prefer it on the smaller time frames because the trend clouds, though they dictate the trend, it's slow. In my opinion, it's slow, it's more conservative, it's supposed to be safer, and that's why it's going to trigger at a later time. It's not going to flip right away. Alright, so that's pretty much your trend clouds. Like any other algo, the point of the F3 algo is to give you a heads up as to what price should be doing, whether you should be buying or selling based on what's going on, the price action. Again, the F3 algo is a combination of a few indicators. You got some RSI in there, some stochastic, some MAC. So just your basic indicators that everybody else use, thrown together to give us signals that we consider to be reversal signals or strong signals or places where you should be taking your longs or shorts. People use them in different ways. Some people prefer to use them on the big time frame as a bias to get their bias on what price is going to do, and then trade it on the smaller time frames. So over time, people have found different ways to go about using them. How you use them is ultimately up to you. I personally like to use them on the 1 minute time frame, 30-second time frame, but that's pretty much it. Your F3 algo is your basic buy and sell signals. You do with them as you please.